Double-Jeopardy or Not, investigating the experience of Black women entrepreneurs seeking small business financing. Some background on minority women and small businesses is that 99.9% of businesses in the U.S. are small businesses, and these small businesses employ almost half of all U.S. employees. Looking at women-owned businesses, 50% of them are owned by minority women, and Black women make up the largest segment of women-owned businesses after non-minority women. Some previous research that's been done on the theory of intersectional consumers has found that there's this double jeopardy factor for intersectional consumers, where they're exposed to potential sexism and racism because of their gender and race. Our novel research contribution is that we are looking at these intersectional consumers, but also factoring in the gender and race of the employee that the intersectional consumer is interacting with. My research questions are 1. How are consumers at the intersection of race and gender treated by financial institutions in regards to obtaining small business loans compared to non-intersectional consumers, i.e. white men? And 2. What are the public policies and business practices that can buffer and protect intersectional consumers from differences in treatment? The primary method we used to collect data was match-pair mystery shopping. And with this method, we used Black females, white males, white females, and Black male testers, and we sent these testers to 52 different bank branches in Atlanta. We did 50 tests for each condition, so we sent in 50 Black females, 50 white males, 50 white females, and 50 Black males to the bank branches. The Black profiles were slightly better than the white profiles, however, the profiles that we gave all testers were solid enough to easily qualify for a small business loan. And when the testers went into the bank, they were looking for a $60,000 to $70,000 small business loan for their small business. The testers recorded their experience while they were in the bank with audio recording and video recording where it was legal, and then they filled out a follow-up survey as soon as they finished their visit at the bank. There were 3 primary loan products recommended to the testers, the first one being the business line of credit. This is a very flexible loan product that's similar to a credit card where you just pay back what you use. It does have a higher interest rate though because you're paying for that flexibility. The second product is a Small Business Administration loan or an SBA loan. It has a lower interest rate because it's mostly backed by the government. However, it usually has a longer approval process, it can be difficult to qualify for, and it's not as flexible, it's just a lump sum payment. The third product is the home equity line of credit, which is very similar to the business line of credit. However, you're using your home as collateral, so if you default on the loan, you're going to lose your home. As far as analysis goes, we analyzed multiple objective measures in every test and then compared the treatment received by all the testers. We found significant differences in treatment in regards to product recommendations as well as encouragement and assistance. We used both chi-square difference tests and log linear analysis to compare the Black female to the white male, and then to also compare the Black female to all others, which is the white male, the white female, and the Black male. With the business line of credit, we saw that the white male was offered this loan product significantly more than the Black female. When you factor in the employee's race and gender, we saw the most significant difference in treatment when there was both a gender and race mismatch between the employee and the tester. So here, the Black females are only told about the business line of credit 11.1% of the time when they are encountering a loan officer that is a different race and gender than her. Looking at the Small Business Administration loan, we see the opposite effect where the Black female is being recommended this loan product significantly more than the white male. And then once you factor in the employee, again, the most significant difference in treatment is when there's both a race and gender mismatch between the employee and the tester. We did not find any significant differences in treatment with the home equity line of credit, but in regards to the encouragement and assistance factor, one of the measures we looked at was whether or not the tester was offered a follow-up appointment with the loan officer. And we found that the Black female was offered a follow-up appointment significantly less than the white male, as well as significantly less than all others, which again is the group of the white male, the white female, and the black male. And then when we look at the employee's race and gender, the most significant difference in treatment with regards to being offered a follow-up appointment was when there's both a race and gender mismatch between the employee and the tester. And in this case, the black female was never offered a follow-up appointment when she was with a loan officer of a different race and gender than her. The key takeaways here are 1, that black women are not provided information about business line of credit products as frequently. This is concerning because the business line of credit is a more flexible loan product. Key takeaway 2 is that black women are recommended SBA loans more frequently. This is consistent with previous research that has found there's a stereotype around SBA loans where they're perceived as somehow a minority or marginalized loan product, even though the SBA loan is not that. And then key takeaway number 3 is that black women are not offered follow-up appointments as frequently. This is concerning because loan applications can be difficult to fill out. Having a loan officer there to walk you through that process in a follow-up appointment can really make or break whether or not you're approved for a loan. Some market solutions to this difference in treatment that we saw the black females received, or this double jeopardy that the black females are exposed to, is diversity in staffing. The graphs show that the most significant difference in treatment occurred when there was both a race and gender mismatch between the employee and the tester. So having employees that are diverse is going to help minimize the differences in treatment that consumers are receiving. Fair lending training will also help with this issue. Online lending and unbiased technology solutions can reduce differences in treatment because there isn't that face-to-face interaction where an employee can perceive someone's gender or race. And we have seen a huge rise in online lending in the past few years. Additionally, improved customer service quality at banks will also help. Even though the black female tester received or was offered a follow-up appointment significantly less than the white male and than all the other testers, across the board, no one was being offered a follow-up appointment very consistent. This is a failure on the part of the bank's customer service. On the policy solution side of things, we really need better business loan data reporting regulations. The Ensuring Diversity in Community Banking Act of 2019 addresses the need for better loan data regulations. However, this legislation has not been passed yet. The current loan data reporting regulations are not stringent enough to be able to tell if there's discrimination going on in the small business lending market.